Good morning. It's Wednesday, May 29th, about 6 a.m. Central Time. Overnight, the precious metals are lower after yesterday's blowout rally. You got June gold down about 10 bucks, about 0.5%. You also have July silver unchanged. July copper down about 1% here. It's down about 4.25 cents. You also have platinum and palladium slightly lower. So many of you took positions off the table yesterday. Congratulations for actively using proper risk management. Overnight stocks are sliding globally as treasury yields spike and the fading expectations weigh in for the next interest rate cut. The higher for longer theme continues, with some Fed officials discussing the possibility of an interest rate hike. So wow, the devil's in the details. So what I'm doing here is below this video link, I'll post the CME's Fed Watch tool. Many of you inquire about it, so I want the link where you can see it's public information. It's on the CME's website. So you click on the upcoming June 12th meeting, you could see that there is a 0.9% chance, the way the swaps are pricing in, of a 25 basis point rate hike. Now, while in September, so you want to click on the next tab out to September, the expectations cast just this wide range. It goes from a 53% chance that it'll be unchanged, 41% chance that we'll see a 25 basis point cut, a 0.5% chance of a 25 basis point hike, and then a 4% chance of a 50 basis point cut. So it's like a standard deviation curve, weighed in and skewed towards more of the cut to unchanged stance. So we're going to have to really watch the data is what it really means. Now, in other markets, with the copper market sliding lower, copper is grabbing some attention here in the headlines as the Anglo-American said that they will not give BHP more time to develop a takeover strategy, ending the $49 billion pursuit of the world's largest mining company, or by the world's largest mining company. So the decision came just hours before the deadline for BHP to commit to an offer or walk away for the next 6 months. Now, coincidentally, Bank of America released a research piece indicating that the CME just suffered a short squeeze. So that's it right there. And then really the question is silver next? Now, they talk about the key element is common on this on copper versus other metals that were on the LME, and that, the inventories are low, and that the contracts, since there's a number of paper contracts chasing these inventories, that the short squeeze comes into play. So, when you look at this type of thing, you got to think what your goals are when it comes to like silver or copper or anything. Is your goal to essentially make money, try and make money from the directional price of something like silver or copper? I can tell you that copper is not an asset class that you want to continue to store and hold on to, because of the fact that it takes a whole lot of copper to have a significant size of money and dollar denomination. So you're not just going to start stockpiling bars of copper, similar to like when you get into the silver. If you've ever actually stored a contract size, it's 5,000 ounces of silver. It's like 300 pounds of silver. That's a lot of silver to just be lugging around and holding around. And where are you going to store it? How are you going to offload it? Things like that. That's why I think that when it comes to these types of squeezes, you want to be in the asset class that is the squeeze. You want to hold the warrant, the paper warrant that says you specifically own this asset class or have rights to this asset class, and that's what these companies are chasing because of the standardized terms of the contract. So if you're an end user, an end producer, or somebody who needs silver, and you use the CME's product to either get that silver or hedge your business, you're going to need to participate in that standardized contract. So people on the long side should benefit from a significant silver squeeze, where if you just have a bunch of pre-1965 quarters, what are you going to do? Run down to the pawn shop? The bid offer will be so wide, it just doesn't make sense. Play the product where the squeeze is at, and play the producers that produce these things. Example, the miners. So that's why I think that BHP and this Anglo-American are fantastic companies, along with Southern Copper when it comes to copper. So that was a bit of a tangent there. Now, looking at other markets here, you do have crude oil futures up 62 cents. It does seem like headlines are starting to brew in the background in the Middle East with tensions and things like that. The key level on crude oil is 81.20. It's the 50-day moving average. It's also a trend reversal point. It'll go from the participants being short, and really the breakdown and where they got short at was that May 1st sell-off. If you look at a chart, comes up and then it goes splat and it goes down and bumps around the 200-day moving average. That's the part where they're short. It's got to erase that particular bar, that May 1st bar, and then it'll break out to the upside, and then I think the party's back on. Copper, you're getting close. You probably need a close over 490 in order to get that breakout to the upside and get a new bull market going. Right now, it's kind of bumping around neutral because we've had that one big sell-off, and then since then, just sideways action. The gold market I outlined on yesterday's video, it's right around that 50-day moving average, 23.26. You don't want to see the market close below that level. Could be a bigger washout to be had. And then on the silver market, looks great. Double top possibly on the chart. Need to see an extension over like 32.50 in order to really keep things going to the upside. But otherwise, if the precious metals are across the board under some pressure, silver could go out of nowhere and end up going against the grain, being down 15 to 20 cents. Then next thing you know, it's like 32 cents, and then the sellers come in, and who knows, we're back down at the recent Friday low. So you don't want to trade that product below the Friday low if you're still hanging on, because of the fact I believe that we could wash out down to about 29.07 to 27.93. So there's a big air pocket in the silver market down there. So, and then on platinum, a lower high could be forming in there, so a little bit cautious. Really, I think the thing to watch is the U.S. equity markets with the higher for longer theme, the breakdown back below 5,300. We'll have to keep an eye on some levels, and a couple strategies that we are outlining is buying a specific put and then buying a put spread below it. If the market sells off, you sell the put spread or sell the put for the amount you paid for the put spread, and then you walk away with essentially what would be considered a paid for asset using other money made from other trades. So that gets a little bit more into strategy. Remember, this video is for just educational purposes here. If you're working with us at Blue Line Futures, call into the trade desk, shoot me a text message, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.